My name is Dan Dorval, and I'm President and CEO of Dorval and Cherney Financial Advisors. I am an independent certified financial planner and author of my book, Financial Success for the Rest of Us, Reality-Based Financial Planning for Mainstream America.
Hi, my name is Leah Woodley. I'm an associate financial advisor with Dorval and Cherney Financial Advisors. Our conversations discuss what it means to do quality of life planning in all areas of your life.
So, Dan, we are approaching the end of the first half of the year, and I know we send out mid-year client letters to our clients about what's going on. We've seen a lot going on so far this year. We've had wars and a bunch of other things going on. So, highlight for me just a little bit of what you think might be in your mid-year letter this year.
Well, I think one of the biggest things is the disconnect that people are feeling because in the first half of this year, we've had so many people express anxieties or fears or concerns about the direction the country is going. And so
Mhm.
I would argue the media coverage has been very negative in general. Like you said, when you have wars and you have higher costs and people are
Mhm.
struggling with a lot of different aspects of life in general, you look at that and you go, okay, I don't feel very good about things. But, we had a meeting where the person brought up and said, okay, I need some investments to use for a certain goal that they needed to do sooner rather than later. And they go, I know this isn't a good time to be taking money out of the market because, things haven't been good. And I reminded them, I go, your accounts are up significantly year to date.
Mhm.
So that disconnect is investments for the most part. Now, not all investments, but investments for the most part have actually done really, really well in the
Mhm.
first half, at least, at the time that we're doing this video. That can always change pretty quickly. But it's a weird feeling to look at statements and go, hey, I've made a bunch of money on my investments, but at the same time, I don't feel like anything is very good right now.
Yeah. And we definitely are pressured on a daily basis from what we always refer to as noise. There's definitely fear tactics out there through the media and things like that, and everyone has their own opinion, and everything can really make you have that disconnect that you are referring to. So I know quality of life planning is the core of who we are. In times like these, we definitely want people to focus on what's important to them and their values, priorities, motivations, and goals so that they are not caught up in the noise of what's going on. Now, when we do look at the markets right now, there is some volatility. What do you advise people to do at this time? I know pretty much we want people to stick to the plan, stick to their plan, but what do you want to say to that?
Well, the first thing is whenever we're dealing with investments is we are proactively aligning those investments with what someone is trying to accomplish. So if somebody's planning to
Mhm.
retire in the next few years, we look ahead, we say, okay, how much income are you going to need from these investments in the future? Now that, sometimes that's bridging when you're waiting to take Social Security or a pension and you need maybe a bigger amount from your investments early on in retirement. We'll look at that and we'll say, okay, 3 years from now, you're going to need $4,000 or $5,000 a month coming out of your investments. Let's set that money aside, that portion aside into more conservative, less volatile types of investments in order to make sure that if the stock market tanks or if more aggressive assets tank, you're still in a position to be able to know that your goals are going to be okay. This is proactive investment management. Now,
Mm.
okay, we've begun with your values and priorities in that process. And then we look at things like, okay, what are the things that are outside of your control? Maybe the markets are very overvalued, which, in my opinion, we've had a high valuation actually for a couple, 3 years. And
Mhm.
so when we see excessively high valuations, that doesn't mean the market can't keep going up. In fact, that has
Mhm.
happened many times in the past. Valuations can actually keep getting higher. The problem is it's creating a greater and greater risk of a more substantial decline. It's like adding, grains of sand to a sand pile. And this sand pile, as it gets bigger and bigger and bigger, you start to get fingers of instability growing through the sand pile. And that
Mhm.
instability can keep getting bigger and bigger. But now all of a sudden, one grain of sand might land in a certain spot that triggers an avalanche and it starts to collapse down the side. And you've all seen this happen with something like a sand pile, and you don't know which grain
Mhm.
of sand is going to do it. So
Mhm.
we want to make sure that you're okay, even if that grain of sand hits in the next 6 months or a year or whenever that happens. And now we have a significant decline because we will build back off of
Yeah.
that now, different pile that's out there. We will build back from that. So right now, what we're doing is trying to mitigate some of that potential loss if and when there is a trigger like that. So we're capturing as much upside as we can while things are still going up, but we're also trying to mitigate a decline. And where we're seeing that right now, it is really easy to identify the difference between certain types of asset classes. I mean, on a daily
Mhm.
basis, you'll see one thing like maybe the NASDAQ or tech might go up. Some of our other stock holdings are actually going down at the same time. And then the next day, you'll see the exact reverse. Tech might have a
Mhm.
little bit of a reversal, and the other things that we own are going up. And so we're really reducing a lot of that volatility along the way and making people feel more comfortable with all of the uncertainty in their world.
Yeah, that's why diversification is important as well, because like you said, some things go up, some asset classes go down, and um, when you have that diversification, it helps to balance all of those things out. Now, when it comes to interest rates and inflation, people are concerned. People are paying $4 at the gas pump now. So, what do you say to this season that we're um, in regards to people's anxiety about those things?
Yeah, it's always hard to know what's going to happen with something like gas prices, but with
Yeah,
typical commodities in general, it gets overplayed when
yeah,
things are up, and then it gets underplayed when it starts to creep back down.
yeah.
So gas prices almost always go up heading into the summer driving season. And we
Hmm.
just happen to have a war in Iran at the same time. And I'm sure the current administration was hoping that the war in Iran would end very quickly so that they didn't have those two things happen basically at the same time. So we're driving up gas prices. This is a time of year where that commonly happens. Now, maybe this year it's magnified more so than other years, certainly seems to
Hmm.
be the case. But I would be shocked if those gas prices don't start to come down later in the summer season as we head towards less driving time periods. And it's
Right.
just kind of a normal cycle. And then who knows what happens with the war? We don't pretend to know those things. But if that, ends in some way and oil starts flowing again, it wouldn't be surprising to see kind of, prices drop, pretty quickly. We saw this with eggs a couple years ago. Eggs ended up
Yeah,
skyrocketing,
yeah.
and we got up to like $8, $9 for the wholesale price of a dozen eggs. And it was crazy. You
Hmm.
heard about it constantly in the media. In fact, it was around Easter time, and people were like, oh, we can't buy eggs for Easter eggs or anything like that. And then what happened is by the end of that year, eggs were down into, the $2, $3 per dozen as far as wholesale prices. So they dropped significantly. And that was for any number of reasons. So commodity prices do go up and down. I think that gas is something we all use. And so I think we're all feeling that. And then that gas starts to translate into higher food prices because, of course, there are trucks that, move these things around. So I think people are feeling this right now in part because it's so highlighted in the media. And
Yeah,
then what'll happen is it'll naturally drift down and we won't hear about it anymore until it, goes back up again.
yeah. It's important not to overreact to headlines
Yeah.
because we get bombarded by different headlines every day, and we are experiencing some things, but like you said, everything is cyclical. Um, so, and finally, how does quality of life planning help investors navigate these uncertain markets? And how can people position themselves for long-term success for the rest of 2026?
Yeah, so sometimes what we'll see is somebody will come in and they'll say, okay, my retirement accounts have done really well over the last few years. And so now my balance is maybe significantly higher than what it was a few years ago. And I have reached my number. I
Mm-hmm.
wanted to get to 2 million, 3 million, 5
Mm-hmm.
million, whatever number somebody might have tried to get to. And then they say, well, when I hit that number, I'm going to retire. Okay, great, right? And then my question for them is always, okay, you've done really well, you hit your number,
Mm-hmm.
now you're going to retire. What happens if next month we have a 10, 15, 20% type of decline in the market and now you're significantly below your number? Are you going to go back to work? And
Right.
they look at me and they go like, well, I don't know. Well, would I have to go back to work? And see, this
Mm-hmm.
shifts the focus from things that are outside of your control. That market movement was completely outside of your control
Right.
to things that are under your control. You decide when you're going to retire, how much you're going to need to maintain the type of quality of life that you want to have with those retirement years. You control how you're going to take money out, when you're going to collect Social Security, and what that all looks like. And by focusing on quality of life, we shift that focus and that perspective from things outside of our control into the things that we can control. And even in our conversations in meetings, it is really common for somebody to just shift right back into, but what about inflation? But what about,
Yes.
what about gas prices? What about the market? What about elections? All these things. And I immediately go back to the quality of life focus and say, okay, you have no control over any of that, but you said you really want to retire at the end of the year.
Mm-hmm.
Let's look at what we did proactively to make sure that that was going to be okay, regardless of the situation at that point in time. And yes, if the market goes down right when you retire, it does make a lot of people uncomfortable. Don't get me wrong.
Mm-hmm.
But if we then point to the actions we took before the bad thing happened in order to make sure you could navigate that storm, now it all works where you start to shift and say, I'm comfortable with my decision and I feel like I can still take that trip or do the things that I want to do in retirement.
Yes, that is so, so important. Well, thank you so much for everything that you shared about this mid-year update. And until next time, have a great one.
Thanks, Leah.